generally. But my name's Olivia. I'm a program manager here at Climate Salad, and I look after our industry report and trade mission programs. As part of our trade mission programs and our global growth program as well, we really try and bring in the best of the best to talk about new international markets that climate tech companies are interested in expanding to. And before I introduce our wonderful presenter, I'd like to acknowledge the traditional custodians of the land on which I stand. That's the Gadigal people of the Eora Nation. They have 60,000 years of climate tech innovation and knowledge that we really have so much to learn from. I also support an Indigenous voice in Parliament. And without further ado, I will pass over to Charlie Macdonald to give a quick little introduction to himself and then kick off the presentation. Thank you, Charlie.
Thank you, Olivia, and thank you all for joining. It's so refreshing to hear a welcome to country. I haven't heard that in 6 months since I've been in Europe, and yeah, it feels good. I am going to present a short slide deck on maybe just to give some talking points. I will give a brief introduction to myself as well. So I might just start sharing that and we can get right into things. Let me just get a check on whether you can see this presenting in full screen. Hopefully you can see a slide deck now. Can I get a thumbs up, Olivia?
That's great.
Thanks. Awesome. So the topic of today is fairly broad, and we're going to talk about Europe. There's a cordon coming to London, I know, which is very exciting. Really great initiative, and I think follows a lot of the reasons that I think why I'm in Europe. I think Europe's an incredibly exciting space, and we're going to talk about why. The agenda, I'm just going to give some brief hellos. I'm going to give the overview on what's happening in EU climate VC, and then I'm going to share some hot tips for Aussie climate founders that are looking to raise in the European landscape from what I've seen so far. But probably worth giving some context on why you should listen to my hot tips. So I am a impact VC of 5 years. I am Australian born and raised, grew up in Sydney. The beach was completely wasted on me in Sydney. I never had the shoulders for surfing, and I had a bit of a fear of the ocean. So I moved to Melbourne, where there's absolutely no beaches within walking distance that are worth going to. And the experience there was working a lot with founders, finding myself in a very fortunate position to join a first-time fund called Giant Leap, which hopefully most of you are familiar with. It's funny coming to the European landscape where, because ecosystems are so insular, nobody's heard of Giant Leap in Europe. But yes, that in 2018, I joined that fund, was there for 5 years, invested into 30 odd companies, and that fund had a very strong environmental thematic that we were investing into. So I think there's at least one person on this call, Joanna. I think you're on this call that is in our portfolio, but companies like doTERRA, like Change Foods, like Amber Electric were companies that we invested into. I moved to Europe after 5 amazing years at Giant Leap because I realized that there was a much bigger world out there. We have a very lovely pond in Australia, but it is a fairly small pond. And the European landscape presented to me just the opportunity to go really wide on a market where the scale of talent, the scale of capital, the scale of opportunity in climate tech was completely different. So have spent 6 months here. I first did a fellowship at World Fund, which is a climate technology fund that has a $350 million mandate, or 350 million euro mandate to invest into a wide range of climate technologies. So went really deep on the ecosystem and had 6 months of conversations with founders, conversations with investors, and really just getting a lay of the land. So that's what I'm going to try and synthesize for you today. So into the EU climate VC scene, I think it's probably just worth covering off the main things to know. So really, the EU scene has had a very similar storyline to the rest of climate tech around the world. We had really, really big interest in 2021 in almost every market. Australia had a huge year for climate tech in 2021. Then we had this story of resilience in 2022, where everything was going down except for climate tech, and we had this, this capital actually was like even a little bit more was invested than 2022. So this sustained flow of capital into climate technology. And then in 2023, there was the inevitable pullback in climate technology. So still, when you look at the rest of the market, I think the data points from around the world are fairly consistent that climate tech is still showing signs of resilience against the broader market, but what goes up must come down. And I think we are reverting to a mean here that is reflective of the broader economic conditions. In terms of where Europe sits in the scheme of things, you probably noticed from this slide here. So the blue chunk is Europe, and then the green chunk is the US. And the comparisons are always against the US as the biggest market, but US has always been kind of dominant share here. And you can see in 2023, at least for the amount of time that this data is showing, the gap between the European chunk of capital and the US chunk of capital is closing and is almost at parity in 2023. And this is reflected in the historic data as well. And really, the EU is outpacing. It's a smaller market than the US for climate technology, but it's growing more quickly. We're seeing this growth being driven by many different factors that I'm going to get into in a second. In 2022, at least, there was a huge amount of growth, particularly in the industrial space. In the green steel space, there's new regulations coming in that have fostered a lot of innovation in industry. So Europe is a fast growing climate tech market. When you look at the current state as well, this is a quarter by quarter Europe versus the US. You're seeing that the gap is continuing to close here, and there's at least, so it looks like there's some resilience in the European market, where the US is feeling like there's more fear and uncertainty in the US market, whereas at least from my experiences in Europe, there is still a lot of competition for good deals in the climate space. There's actually a lot of EU interest that's kind of filling the gap where US investors are pulling out of the European space. There is enough capital here that the best deals are still pretty hard to get into. And at World Fund, I saw that firsthand with a few deals where it was a real struggle to try and get the check in. So the why behind this, I think these are the three key reasons why I think Europe is uniquely well placed to be a fast growing climate tech market. And this is not just for investors. I think if you're considering the opportunities in the European space, and I was trying to sell you, you can imagine me being the Commission of Trade in the European Union for this slide. Why climate tech companies should come to Europe. They have really the first and foremost that the last 2 years of the Russian war in Ukraine have put into stark light the fragility of energy systems, food systems, the Ukraine breadbasket, as they call it, Ukrainian wheat supply. These are causing a lot of concern for European countries. The graph that you've got here on the far left, I'll just explain that quickly. That's the energy spot prices in Germany that were, you can see, like gone from very, very, very consistent to just off the charts volatility as that war hit, and you saw restrictions in oil and gas and all the various things that were reliant on Russian imports. So there is much more interest from governments in solving these problems by bringing that energy, bringing that food supply into a domestic market, having that domestically produced through, renewable power, through, bioreactor facilities that are producing proteins on site, those kinds of things. Secondly, the European tax system is famously, I guess, for some US neoliberals would be, the antithesis of what you would want to see. But I think Europe does taxes. It's not perfect, but I think they do them quite well and quite effectively for the climate space. And it creates a market where if you are inside Europe, you are acting responsibly, you can secure competitive advantage. And that is a really important thing. So one thing that is happening right now is the ramp up of something called the Carbon Border Adjustment Mechanism, which is basically for any imports coming into the European space, there will be a price of the carbon cost of that import, and it'll be taxed at the point of importing the good. And so the graph in the middle here is showing that from the US, from Turkey, from Russia, from Ukraine, those are the fees that will be being paid on imports coming in. And so you can see that Russian fertilizer, Russian oil, Russian gas is going to become very, very expensive, which will make other forms of energy and imports where there is much more proof that you have decarbonized your supply chain more competitive. And then lastly, we've got consumer forces where consumers want to buy better. And in the EU, there's really, really good regulations. The CSRD is the Climate Sustainability Reporting Directive. That is coming into full force next year, I think 2024. And that's basically going to force large companies to disclose their emissions, which is going to give investors and consumers the ability to see exactly what they're buying from a sustainability, particularly a carbon perspective. And you can see that the difference between the EU and the US in terms of the percentage of companies that have made net zero commitments, because they see on the horizon they need to change. So they're buying services that are decarbonizing their supply chain. They are, the wave of carbon accounting here has just exploded. There's so many companies trying to solve this problem. They're all scrambling to try and act quickly because they know that next year, they're going to be basically naked when it comes to their carbon footprint. Okay. And I've got one more slide here. I think just for anybody that's interested, like this is readily available kind of information if you read any report. But the breakdown in Europe, mobility is always seems to be the biggest chunk in every one of these breakdowns of where the funding goes. I think the reason for that is because there's a lot of money that's gone. It groups in these kind of very capital intensive micro mobility solutions that have been launched all around the world, the scooters, the bikes, and various things. So I mean, just taking that with a grain of salt, the energy investment is obviously very important. Circular economy is surprisingly quite, maybe not so surprisingly, but it has a lot of investment going into it. Carbon is particularly around this carbon accounting, carbon capture, carbon removal industry, and then farming and food also has a big chunk of funding going into it. Okay, so tips for Aussie founders in the EU, and this is reflections from putting myself in the shoes of an Aussie founder looking to fundraise from EU investors. This is some tips that I think are worth knowing, or just in kind of framing your approach, because I know that there's a lot of there's founders who are looking for all sorts of things when you come to Europe. some of you will be looking for fundraising. Some of you will be looking for, customer connections. Some of you might just want to see the sites. So I will be framing this as fundraising, but yeah, I'm hoping that will be useful to most, if not all of you. So tip number one is, I think the biggest reflection that I had, and maybe this is actually a bit of a disappointment that I had coming to the European space, where I was coming to a market where there's more than 10 times more capital than the Australian space. There's an immense amount more funders. There's a huge amount of specialization, a huge amount of knowledge, like really, really talented investors. Problem is kind of the same story that you get when you're raising from US investors. If you don't have EU operations or you don't have EU headquarters, it's very, very easy for these VCs in particular to just not even open the book. Like they have a Europe only mandate, or in exceptional cases they'll look at the US. But for everything kind of pre-seed, seed, and I would say even Series A, I think it is still very difficult to find an investor that will even have a conversation with you as an Australian company. The reasons for that are many, and maybe we can get into it in the Q&A. But the tip here that I have is, I think that there are definitely opportunities to raise from EU investors, and I would suggest looking at two streams. The first stream is there is an increasing amount of co-located funds, so funds that have headquarters across Australia and the EU, and I think they can be a really great kind of foot across both camps for that early stage check, if that's what you need, and you really want to secure someone that can connect you into the European ecosystem when you need to raise that next round. So I put some names here. Regen, Possible, Minderoo, Arowana. I know they all have headquarters both in Australia and in Europe. The other stream is that there are an increasing amount of corporate venture funds that have an international mandate because they operate internationally. And this can be a really promising avenue for founders that are trying to, I guess, like break into the European space, because they can help you maybe set up that first facility, which means that you can then raise capital from European VCs as you scale up, because you can tick the box of, we're a European country, European operations tick. Let's have a conversation because our product is so amazing, and we've got a brand name investor on our books. I had double checked this on the Airtree Open VC database. This you can filter for HQs in multiple locations. So this isn't a complete list. These are just some of the ones that I know have interest in Australian companies. So might just be worth checking that out. And I will share this deck afterwards, so you can use these links. Tip number two. So there are a lot of investors in the European space. What that means for climate technology is, more so than in Australia, you get a lot more specialization. And so the hot tip here is, firstly, kind of know your investor and know your space, because there are, in Australia, I think from memory, we have maybe like 2 or 3 investors that I would say are specific agri-food. I'm trying to think, do we have like any energy specialists in Australia that only do energy? I'm sure we do, but I just can't think of them right now. But the point that I can't think of them off the top of my head tells me that there's not that many. Whereas in Europe, this is like not even a complete list. I just went through my Rolodex and the CTCV database and just pulled out a couple that I know are specialists. And this is like tip of the iceberg. There's so many people that only do energy, only do agri-food. They build portfolios of just that space. So it's really important to know your investor, number one. Number two, it also means that there is a lot more deal sharing that happens in the European space. And the reason for that is that because of this specialization, if you're not quite right for one investor, they will send you to investors that have that specialization. Because for them, it's a network bonus to, send a good deal to somebody that actually is the right fit. So I think like asking for that in Australia, that question of like, oh, do you know anybody else that could be right for this? I think actually isn't that, doesn't really result in that much traction in the Australian landscape, because everybody's kind of a little bit generalist with these like slight or like, big, if you've got a thesis at Giant Leap, obviously we had a thesis of impact. And so we only looked at impact deals. But yeah, for a lot of the other funds, it's like, if it's not right for us, it probably isn't going to be right for, the other people in our network, because we're all kind of looking at the same kinds of deals. Whereas in Europe, there actually are specialists that might be right for you. Tip number 3. So Article 8 and Article 9, you will hear, you'll probably come across this in the European landscape. What this means is under the Task Force for Financial Disclosures, or one of the 4-letter acronyms that is about sustainability reporting, that's escaping my mind right now. Funds have to meet certain criteria to be classed as a certain type of fund. And Article 8 and Article 9, it's on a spectrum. Article 8 and Article 9 are the 2 most sustainable impact classes of fund. So Article 8 means that you've got impact policies that are embedded into your fund's mandate. Article 9 means you're actually measuring impact. You have a sustainability target. Like it's called a dark green fund, because it's about funds that are investing for climate impact. And I think for the hot tip for founders is that you can look up funds that have these kinds of classes, because they're going to be your climate investor cohort. And so I've got a list from Sifted of all the Article 8, Article 9 funds. They're the ones that will really care about climate and really care about impact. And I think for this particular cohort, this is probably an interesting avenue to go down. But just worth having in the back of your mind that this exists in the European landscape for the investor side. It's not something you have to think about like other than as a signal that this fund is a climate tech fund. Yeah, all the reporting stuff is on the on the fund side of things. That's for the people like me to work out. Tip number 4. So one frustration I had in the Australian landscape, and I'm sure, I don't know how many hardware founders there are on this call, but you can raise 5 to 10 mil in Australia. Very hard to raise the next 50 to 100 mil if you're trying to scale up a facility or build a proof of concept plant. I was hoping that would be significantly different in the European space. The unfortunate truth is, as you can see in this graph, we've got good amount of seed funding, good amount of Series A funding, and then there's this weird like Series B funding, there's less funding, and then there's heaps of growth funding. And growth funding means unit economics are proven, you're revenue generating, there's no technical risk, it's all market risk. So there's this gap that persists around the Series B for hardware and manufacturing scale-ups, where you need to build that kind of like first of its kind facility, or this like POC facility, so that you can eliminate that technical risk or prove that there is no more technical risk. That is the unfortunate side of things. There are funds that are trying to solve this through kind of like hybrid financing and various methods, and we can get into that in kind of Q&A if that's an interest area. What I wanted to say is that the flip side of this is there is substantial amounts of non-dilutive capital in the European space, particularly for high priority challenges. You're not going to get this if you're building like, a new social media platform. You might get this if you're solving a really important food or energy security challenge. And the EU has, you can see these numbers here. So the EU Horizon budget, which is to solve, specifically for climate R&D, like they're investing $100 billion into this over the next 5 years, 6 years. And as an example of state-funded R&D, this company, this picture here, it's a very serious Finnish man called Pasi. He is actually quite lovely. He is the founder of a company called Solar Foods. They're converting hydrogen and carbon dioxide into single cell proteins. So it's basically like a fuel to food business, very capital intensive, but they were able to secure substantial non-dilutive funding for building their kind of this gap, right? Like the proof of concept factory 0.1 and then factory 0.2. Yeah, I think they call it factory 01 and then factory 02. They were able to secure funding to fill that gap, de-risk it for investors, and have been progressing quite well. And that was from at a country level, that was Finland business that supplied that grant. So that's all the tips I have for now. I'll leave the tips up here because we ran through them reasonably quickly, and maybe just open up the floor for Q&A.
I might have a go if there's no one else.
Awesome.
Yeah, so it's James Wilson here from Orchestra. We actually met.
Yes, I remember.
I think about 2 years ago.
Good to see you.
We've just closed our seed round, so yeah. Sorry, you missed
Congrats.
out.
Yeah. You don't need any of these tips. You're good.
I'm actually like, there's quite a few tips in here around hardware, but if you got tips around SaaS in particular, like, and how EU investors are looking at SaaS products.
So I think I focus on hardware because that is typically where the challenge is. SaaS companies have a little bit of an easier run, I think, because you're operating in the same market as really any SaaS product, right? Like you can go after generalist VCs, you can go after climate VCs, you can go after energy specialists because you're helping them to deploy solar on commercial sites. The tips that I have won't be substantially different than the tips of like going after VC generally. Like obviously you need to pick your investors. I think the top two tips still stand, and maybe even the top 3 tips still stand, where for someone like or for a business like Orchestra where you can deploy into an international market, I think you still probably need to have at least a customer or a team, or ideally both, in the EU to be able to raise EU funding. Yeah, that still definitely stands. I know it's like very chicken and egg. I think the advantage for you though is you don't have to raise necessarily a huge amount of funding to build a facility in order to have operations. You can kind of launch operations in a much more capital light way with maybe your Australian raise your seed round, deploy a small amount of that resource just to like exploring the UK market, or the whatever market is the best. I know that Germany is popping off for solar installations now. And then once you have that, like you have a story for your next round where you can say, we got this traction in Australia, we've launched this market in the EU, and now that we've launched this market, we're looking for an EU investor to help us take it to the next level.
Yeah, I mean, that's very much our strategy, is just try and get like a fairly reasonable base of customers globally, particularly in Europe, and then use that as a base to raise in Europe.
Amazing. Best of luck with things.
Thank you very much. Good tips. Thank you.
Andrew has his hand up. Do you want to ask a question, Andrew?
Yeah, thanks. Thanks for the tips. Really appreciate it. And apologies, I missed the first sort of 5-7 minutes of the prezzo, but we've just been, so this is Andrew from Carbonaut. we've just been in Switzerland for a few weeks, and you're sort of mentioning the EU as a zone. I was just sort of off the shelf in your mind. Do certain countries have it? Like you just said, Germany's sort of popping off for solar. When we talk about the EU and we start drilling down into specific regions, have you found that different countries have like a different, I guess, a different sort of bent or a different sort of angle of attack? Is there any sort of better countries from your experience? We're kind of eyeing off Switzerland for a bunch of reasons, but I'm just, having very limited viewpoints from Aussies over there. Like, is there a country that you reckon's better than others for sort of like ag, software, fertilizer, like food chain stuff?
Yeah. Really, really good question. Like, the answer really can't be simple because of Europe is such a fragmented market, and there is, I think you really do have to treat it a little bit like a basket of goods. Like everybody's been mashed together. They all speak different languages. They're trying their best to be uniform, and I think they're uniform on like overall climate goals, but you will definitely find differences country to country on how investors behave, what their sector focus is, and what will do well. Some comments that I have, like first ones that come to mind, really worth knowing that the big markets for climate tech, like where is there a lot of climate tech funding? So Germany, so obviously London and the UK is always a hub for finance, but they are like they've got lots of everything. So they're big by that nature. Germany has a really strong climate funding, but largely for the same reason. They're kind of the second major hub in Europe. And then there's countries where they kind of overperform or overrepresent. They're small overall markets, but they overrepresent in climate. And the Nordics, really, really strong in climate technology, in sustainability, in what they're doing at the country level to support climate tech companies. They have I've seen a lot of really great ag companies being founded in Sweden, in Denmark. So absolutely, that is one of the features of the Nordics market. I'm in Amsterdam in the Netherlands. The Netherlands has a incredibly strong food and ag market as well. And I think maybe one of the tips that you can work with is look at where there's the industry factor, like what industries are really strong in the area. Amsterdam has a very, very strong greenhouse food production engine. Like the Netherlands produces more food than Australia. So it makes sense that there is a really strong investment community, innovation community around food and ag. So I'd look at the industry. I'd also look at where the universities are. So in the Netherlands, there's a university called, I'm going to butcher the pronunciation here, still haven't nailed the language, but Wageningen, and it's like Wagiagen. I probably misspelled that as well as butchered the pronunciation, but that university is very, very well known for food and ag research and working with corporates and deploying innovation throughout the industry. So I would be really looking at like overall where the climate funding is, then looking at kind of the industries that are really prevalent in that country, and if there's like what universities are there, because the climate funders and the specializations will often follow what the universities are doing, because that's where kind of the new innovations are happening, and Europe has a really strong research and development culture. One thing I will say, and hopefully this doesn't offend any French people on the call, like France is a little bit of a different beast when it comes to kind of attracting funding. It's a little bit more insular. So I think that is just one factor, that when you're chasing funding, knowing that there are kind of certain insular communities that are a little bit more difficult to access as an outsider.
Gold. Thanks, mate. Appreciate it.
Hey, Charlie, Mick here. Curious about, you showed the graph about where the capital is going into. do you think, in terms of like mobility being really big and then energy and circular economy and others, do you think the revenue opportunities match the capital? And to make it even to make it even more complex, which of them are really are much more competitive in terms of incumbents? So I look at mobility and energy, like they're big, but they're also really incumbent deep, versus something like circular economy, which might be a bit more open. So just wanting to see which markets are more attractive and which ones are harder. Huge question. So, you know.
It is, but I think there's, I mean, yeah, like it is difficult to answer. It's probably a whole podcast to try and unpick all of the market opportunities. So we were saying this before we kind of brought everyone in. The bull case for Europe, these graphs that I showed you of all, you know, this is why they've got the imperative to change, and this is why the government's doing it right, and why corporates are freaking out. That's kind of like the bull case. The bear case for Europe is it is old AF, and they're like the buildings are old, the energy system is old, the transport systems are old. Like there's so much legacy here. There's not a lot of greenfield happening, or like not a lot of greenfield opportunities in the European space. I think even like circular economy, to be honest, is still operating in I guess it is open, but it needs to find ways to unlock those opportunities, which requires, you know, a lot of capital, a lot of time, a lot of, you know, new facilities, new ways of working, all these things. So I think it's just worth noting that when you're coming into this space with an innovation, you kind of do need to factor in the existing system in ways that maybe you didn't have to do in Australia. In Australia, we've got like this brand new, you know, solar on every roof, and we can deploy batteries. And now, like, I think solar is being deployed with its own kind of system. In Europe, there are there's roofs here, but those roofs are on apartment blocks. There's like very few townhouses, and there's all these complexities around the stakeholders here. So just having that in mind, it is a very different ball game. Where do I think there is really strong opportunities? I would be following, and this is as a VC, this does give me this is like very anti-VC advice, because VCs are like, never trust regulation, never make any business decision based on regulatory changes. I think there are some regulatory changes in the EU that are causing real change. So food corporates, for example, to take one example, food corporates are actually freaking out about decarbonizing their supply chain. And that means that there is really strong impulse for them and really strong incentive for them to fix that. And so the open opportunities there are, if you can actually help them, like, not just like visualize their supply chain, because there's a lot of carbon accounting solutions already out there, but if you can help the farmers to decarbonize, if you can help give them the knowledge, the trust, the tools to do that, that like those market opportunities are very, very open and exciting in the EU. Like, I'm very excited about agri-food generally in the EU space. I think there's like the amount of funding does not reflect the amount of revenue opportunity here. I think other areas that are particularly interesting. Built environment is really difficult in Europe, so that's maybe one that I would like. It needs to be fixed, but because of the legacy systems, it's really difficult. But things like, right? Yeah. So, like super challenging. Needs a lot of like innovative ways to not make any of the council or the municipalities angry with what you're doing.
Yeah. Mate, that's a great answer. It sounds like there's another whole podcast in there. So happy to move on to Pavina.
Please.
Pavina's questions there.
Hey,
Pavina, go for it.
Hi, Charlie. Thanks for that. That was really informative. Interesting to see that there's a big focus on mobility investments in the EU. I guess it's on the back of the EU government wanting to prop up the local auto manufacturing and battery. And also really interesting to see your slide that in the US, there is a lot of capital that's flowing towards carbon removal technologies and CCS.
Yeah.
I guess what I wanted to understand is from an investment mandate and thematics perspective, are you seeing the US and EU VCs converging on the type of technologies they investing? Obviously, the geopolitics are very different. I think from an EU perspective, there's a big focus for moving industries away from gas, right, towards electrification, whereas that's not so much of an issue in the US where there's cheap shale gas.
Yeah. So the
question
question
is,
is,
are you seeing US and EU VCs, like their mandates are similar, or are they kind of diverging in terms of the type of technologies they're looking to invest in?
so I think I think one data point that I think is quite interesting here is in 2021, for every dollar invested into a European company by European investors, 64 cents was invested by US investors into the same European companies. So if we're talking about convergence, like it's almost like when you think about the barriers for international investors investing into, the EU market, they were almost investing one-to-one into the same technologies, into the same market. So I think the level of convergence is pretty high generally in the climate space. I think when you look at the incentives for delivered by the IRA and the incentives in the Green New Deal, there's a lot of similarities. There's a lot of tax incentives around carbon removals. There's a lot of tax incentives around renewable power, around storage. In terms of the technologies, though, I think you will see differences in where the technology is being created. So in Europe, I've seen, and I'm commenting from afar on the US landscape, but I've seen a lot more research and development around new battery chemistries. I think for it's just a nature of kind of like where the best research is happening. So I think there is divergence around like the battery chemistries being explored, and I'm sure that's the same with carbon removal as well. Yeah, look, it's hard to give you a really good answer here without having been in the US and really kind of ingested that ecosystem. But hopefully there's some some of that was answering the question to some extent.
No, absolutely. And in the current, I guess, investment climate, as I understand, you're saying US investors are still open to investing in EU-based startups.
Yeah, definitely. I think, I mean, something that would be where I would see the kind of natural divergence is there's some kind of like geographic factors that will influence what technologies work where. So, for example, like biogas technology and producing kind of like biomethanol really only works where you've got a lot of density of waste being produced, so that the distribution like into the facility so that you can produce the biogas is not high. Like it's more economic to do it geographically in areas, and in Europe there has been kind of a bit of a resurgence of that. There's been a bit of a resurgence of offshore wind because there's a lot of talent here to be able to deploy that. So there are definitely differences, I think, where Europe will deploy certain technologies differently, but it'll be more kind of geographic and talent factors at play here.
Wonderful. I think, Tom, you've got your hand up. if you're there. Hey, Tom.
Hey, how you going? Hey,
I'm good.
Charlie.
Good to see
Good to see you again.
you.
So yeah, I'm from Zefco. We're doing textile dyeing and finishing. Interested to just touch on what you mentioned before about first of all, not having an office or a presence in Europe, kind of being an automatic cancel. Do you consider, say, having a presence in terms of something like a sales office or something like that helpful, or is it really what they're looking for, businesses headquartered there?
Yeah, I love it. Are you in your warehouse right now?
Yeah,
I love
hardware.
it. Yeah,
It's crunch time over here.
Yeah, so I think it comes in steps, right? Like what you're trying to do is you're trying to get the investor to open the book and have a conversation with you, and then you can build up interest from there. The issue with like the like no European footprint end of the spectrum is like there's nothing that you can say that says that you have any activity in Europe, and then every additional thing that you do is more convincing that you do have operations in Europe and you're serious about the European market. So if you've hired somebody in the European space that's there, that's a point. If you've got a demonstration facility there, that's probably 10 points. If you're you've got half your team there, that's even more again. Or like if you're there, that's even more again. So yeah, I think just looking at it on a bit of a spectrum, because every investor is different and they'll all have like some vague response, but in their minds, they'll have some level that they're looking for in order to say that this is a European, or this meets our mandate for investing into European companies. Just to give an example of maybe one investor that I spoke to who does invest into companies that have that does invest into manufacturing facilities and does invest into international companies that have manufacturing facilities. Maybe a tip that would be more specific for you is when they're doing their kind of screening for whether it suits their mandate from a geographic perspective, they will invest substantial checks into organizations where they've secured a joint venture arrangement to build a first facility. And if like one of those parties can be international and so long as one of the parties is European, they're happy to make that investment. So I think that's something to think about, is like, is there a partner that you can work with and do a JV, they're European based, that unlocks the European capital, and you can come in as like the Australian technology partner that delivers the solution.
Yeah, I understand. Thank you. Appreciate it.
Oh, I think Kirsten, put your hand up.
Kirsten here from Hydrogen Renewables. Charlie, we spoke in the past. We are working on
Good to see you again
green
as well.
hydrogen production. Yes, from biomass waste. I had a question. So it's a bit general, but if you look into a deep tech company for a Series A raise, in terms of the milestone and the traction and the maturity that the company has to demonstrate to succeed, to attract the Series A raise, what are the major differences between the Australian market, the Australian VCs and the European VCs in terms of what they want to see from the company at that stage?
Yeah, that's a great question. So I would say that the level of Australia's as I said, reasonably small market, going really well, like go Australia, but like reasonably small. And I would say that the level of technical knowledge is still growing, right? Like we don't have that many deep tech funds. We don't have that many deep technical investors in the space that have significant amounts of capital. And for that reason, I think the average level of traction required at each stage is higher, because investors can't do the technical DD. They need proof points of market traction. And so you need more more proof of product market fit, you need LOIs, or you need ideally, you know, like pilot revenues or revenue banked or whatever it is to raise a seed round. In Europe, there's a lot more technical knowledge in the investor landscape, and there's a lot more money. So I would say that there's more willingness to fund pre-commercial risky businesses, as in, sorry, when I say risky, fund pre-commercial technical risk, because there are investors that understand the problem better. I can't give you like the specifics because everybody has a different number here, but I've definitely seen a lot more of that willingness to fund the hard things. There's so many cases of companies that have raised, like I think World Fund just announced Enough Foods, which is making mycoproteins, which is a fungus-based protein. They've been pre-commercial for 3 or 4 years. They've had to raise something like 50 mil or 100 mil. I can't remember exactly the numbers, but the willingness is there to do something that you just never see that in Australia, or it'd be very, very rare in Australia to see that kind of funding happening pre-commercial.
Thank you.
Wonderful. Thank you, everyone. We've got a few more minutes left if anyone has maybe one last burning question for Charlie. Otherwise, Charlie, you've done such a good job. You've answered everyone's questions on the EU landscape. That's it. We're all going to go out and raise.
Question. Now that we have a few more minutes left, you mentioned the corporate venture arms of European companies. Do you find that they do like to engage with these early, like super risky early stage startups, or do you find that they want to see some certain maturity before they engage? Like what's their sort of expectations?
Yeah, so if you're speaking to the corporate, you're probably speaking to a risk-averse person. If you're speaking to the corporate venture fund and their background is in venture, you're speaking to somebody who understands they're taking risk. So I think my piece of advice here is like, check out the CVC first, who works for them, like what's their background as a first step, because that will tell you very quickly whether the corporate venture person is somebody who is like inside the business and they're like, oh, corporate venture sounds cool. And they like go and try and do corporate venture, but they probably still got the mindset of like, we're not going to take any risk. And that's not going to be a worthwhile conversation. But if there's somebody that really does understand venture and has a venture background, then that is more worthwhile to have that conversation. Broadly, like the people that I've met at like Hitachi Ventures, at Schneider Electric, they understand that they're taking risky bets that will ideally, like they're looking for the financial return and some strategic benefit to the business. And they've been willing to engage with early stage companies. I think particularly where there's an opportunity to really support with the first engagement with that company. Like there's a clear strategic match between what your innovation is and what they're doing, and maybe they want to test it out with like a pilot with them specifically.
Wonderful. Well, thank you so much, Charlie, for sharing these insights with us. It's been really incredible, and I love the hot tips. There are a few of us on the call that are heading over to London, so I'm sure this was really useful. And anyone else who's heading over later in the year or next year, the EU is such a big kind of market of interest for founders at Climate Salad. So I really, really appreciate you sharing your insights with us, and I hope we can see you in London if you make it over from Amsterdam.
Amazing. Yeah, super excited for you to be over here. Please, if anybody has more questions, I am very open to taking conversations offline. I will share this deck as well, so you have the links, and yeah, just best of luck, everyone. It's always amazing to see groups of people and smart people, so, working on this challenge. It makes me very optimistic to see this level of intelligence and this level of people.